Hi, everyone. I'm Eric Sears, and welcome to the MNP Fall 2024 Agriculture Industry Update webinar. John Loeppky, a partner within MNP's Farm Management Consulting Group, will be providing us with an update on the Canadian ag industry and how both local and international factors are expected to influence various subsectors of the ag industry. I'm a Senior Vice President with MNP Ltd, a division of MNP LLP, which is one of Canada's largest professional service firms. At MNP, we have specialized client service groups we refer to as niches, where ag is one of the oldest, starting in 1958. Within our ag niche, MNP would have hundreds of professionals from across different service lines across the country, specializing in various subsectors such as food and manufacturing, intensive livestock, primary producers, Hutterites, cannabis, and farm income programs. MNP's Farm Management Consulting Group would participate in all engagements that intersect within the ag industry, including insolvency and restructuring. Farm Management Consulting has assisted with the Insolvency and Restructuring Group in the past with forecasting, viability assessments, and even day-to-day management of ongoing farm operations. John Loeppky, our presenter, is a professional agrologist with over 20 years' experience providing advice in the ag industry. John started as an ag lender, eventually transitioning to a consultant, and grew up on a farm in southeastern Manitoba. Our webinar has been pre-recorded to allow you to watch it on your own time. At the end of the presentation, you will find contact information for both John and myself. Please do not hesitate to contact us with any questions. Before I turn the floor over to John, I'd be remiss not to mention Vic Kruger, a partner in our Calgary Insolvency and Restructuring Group, who, for those of you who have tuned in to prior episodes of this webinar, will know started this industry update and committed a significant amount of his time and effort to continue to bring valuable industry updates over the past number of years. Thank you, Vic. With that, I'll turn the floor over to John.
Thanks for that, Eric. And welcome, everyone. As Eric mentioned, we're in the fall session of our industry outlook and going through lots of what's happening in the ag industry here in Canada, a little bit international, and we'll go through all the sectors. So here's a little update on what we're going to do. Our table of contents will kind of, as usual, run through just the market fundamentals, take a look at what's happening in the trade, a few interesting things going on there. Then we'll run through our supply managed sectors, looking at poultry and dairy, move on to crops, hogs, beef, and then end with our wineries, cannabis, and touch on food and beverage as well. So we always start looking at market fundamentals and really have to look at supply and demand. That's kind of the driving factor for most of our agriculture commodities. Supply is usually pretty quick to change, while demand, on the other hand, stays a bit more steady. Canada is a net exporter in a lot of our commodities. So trade is really important to Canada, and that's why we talk a little bit about our trade sector as well. And so more than ever, we think it's important for farmers to understand, the commodity markets globally and all the impacts of the different events happening around the world. And today, even supply management is impacted by trade to a certain extent. Obviously, supply management functions a little differently, a little unique here in Canada. And so while some of these factors don't impact them as much, there definitely is still a lot of the same impact that we see around the globe. So one thing we do want to touch on is, just exchange rates. And why do we talk about exchange rates? Well, we have this, super large trading partner in the U.S., where a lot of our exports land up going. And the U.S. obviously is really important to understand our foreign exchange, how that impacts, the commodity prices that Canadian farmers are experiencing here. And also, when we're looking at purchasing inputs, equipment, that sort of thing, all impacted by what happens in the US and our foreign exchange rate there. So, and of course, we have to talk about interest rates as well. I kind of, showed a big, long timeline here, just to reiterate the point that, traditionally we're in a pretty low interest rate environment still, even though it feels like maybe we're in a bit of a higher interest rate market when we look at a shorter time frame. But definitely, I think as we go through discussing some of the different industries, we're definitely seeing that, from that 2008 onward period, we were in a traditionally very low interest rate, and farms, invested based on that, built their farms and some of their structures around it. And obviously then we're recently experiencing some of the impacts of interest rates going up. And I think obviously we're seeing some of those rates coming back down now. But obviously interest rates impact all farmers. And just wanted to show that, yeah, well, in the short time frame, we might be seeing it as pretty high interest rates. We're actually historically still in a pretty low interest rate environment. So moving on to trade, I think the biggest one that we want to look at is our issues with China recently, and they've targeted canola. China said there was a relationship between, the rise in imports of canola by Canada and the drop in what they saw as the domestic price. So, they've issued, obviously some anti-dumping legislation against Canada, covers that period from Jan 1 to December 31, 2023. So we're just right in the midst of it now, where, Canada has until early November to respond, kind of with some preliminary data to support its position that actually there was no dumping done by Canada. So what does that work entail? Well, it's really, going in and lifting up the hood and figuring out what was the actual cost of production on canola for that time frame, and then illustrating that Canadians were not selling canola under their cost of production. They were actually selling it at a profit. So kind of takes away that anti-dumping mindset. Why is it important? Well, more than half of Canada's canola exports land up in China. And for China, almost all the imports of canola come from Canada. I think latest stat was 94%. So big trading partners, obviously, in that realm. And why is this all happening? Well, it's a larger front, I guess, largely seen as retaliatory based on, Canadian tariffs put in place on EV vehicles and steel and aluminum. And that was driven, I think, largely by the US doing the same. And then obviously, as mentioned, since the US is a large trading partner for us, I think Canada got coerced a bit into following suit and putting up a unified front against China. So that's where we kind of land up. If we look at the US, they're doing the same as us, tariffs on electric vehicles, lithium batteries, steel and aluminum. If this continues, I think in 2025, they're planning on putting some tariffs on semiconductors, 2026, graphite, all sorts of things. As we get into, I think, what's going the US trade war 2.0 with China. And obviously, if we're going through an election cycle here in the US, coming up rather shortly here. So depending on, which party gets into power in the near future, we could see some big changes on this front or status quo, right? So, but interesting to point out that obviously China is also involved in other trade disputes beyond just Canada and the US. On the ag front, they're looking at dairy and pork, both with the EU. And so China seems to be, trying to protect itself and lots of different fronts, and Canada is just one of the many players in that. And I guess something recently that has come up again, I presented this slide back in our spring webinar, but, felt given Recent news is probably worthy to show it again. You know, Canada and India are kind of in this conflict. They've expelled each other's diplomats. You know, Canada's indicating they have evidence of Indian involvement in crimes, you know, against Canadians on Canadian soil here. And so then, although there hasn't been any direct linkages just yet, if there is some trade impact, kind of India's probably important to our, you know, lentils, dry peas, is probably the biggest one on the agriculture side, right? And then obviously some other exports as well. But depending on where this one goes, I guess we'll have to wait and see. But could be some impacts that trickle down to the ag sector as well. So if we look at poultry, you know, obviously in that supply managed sector, I think for the most part, we're looking at some improved prices as we move forward here. Obviously, demand seems to be growing as well. So we're looking at some continued growth as we go through 24 and probably into 25 as well. You know, when we're running some numbers for new entrants, we definitely see that it's a challenge for new entrants to get into the industry. Just incredibly high capital costs and really low margins. So that makes it really challenging for, you know, any non-farmer to kind of come in, right? So if we're looking at margins, you know, I think what we're seeing in general, and this is on the poultry side, is, you know, feed costs are declining, and you'll hear me say that as we go through this on a few different industries. Chick prices have steadily kind of increased as we've gone along, but the margins definitely are improving on that front. I think the industry is still feeling the effects of, you know, avian influenza, and that's across North America. And that's a little bit why chick costs you see going up, because there's just less and less of them as all the different sectors are impacted. So probably hear me talk about feed costs as we run through our presentation today. It's been a good run for, you know, the grains and the oilseeds side of the business, and the livestock sectors have all kind of borne the brunt of that, and don't want to let the cat out of the bag, but I think we're seeing a reversal here as we go forward. You know, if we're looking at dairy, you know, I think we're seeing some moderate profitabilities. Demand is increasing for the product. And kind of that same thing that we just said for poultry, you know, costs are decreasing. Just a note, we do seem to be seeing more dairies coming up across the insolvency part of the business. You know, that there isn't a lot of wiggle room on a dairy usually. So once they're in a tight spot, it tends to not have a lot of opportunity to get out of it without some careful management, and time is probably a big one. But we're seeing different sectors or different regions, pardon me, impacted differently, I guess. And maybe that leads into the next slide a little bit. You know, we're seeing feed costs declining, same as that poultry side, right? Repair costs are kind of trending up. And I think a nice kind of boon for the industry is cattle sales are still strong. We'll talk more about that on the beef side, but that strong beef market is, you know, having creates high demand for cull cows, for crossbred dairy and beef, a few different options there for dairy producers to maybe drive a little bit more revenue than they traditionally have seen. I guess recently, you know, the Canadian Dairy Commission's come out with their cost of production. And so what we can see is, you know, when they index it, you know, it's relatively flat from one year to the next. Actually went down a little bit when they bring back in the cost of production, or sorry, that consumer pricing index has gone up. So certainly looks like results are kind of flat, if we want to call it that. This is maybe an opinion, but doesn't appear that there's going to be any significant change in the milk price when they announce it for the upcoming February date. But we'll definitely mention that, you know, the way milk is priced in Canada is it's on a national basis, and costs are not the same across the nation. So definitely when we've got that national pricing in place, we see certain regions that have higher cost of production impacted a little more than others. So, and no surprise there, then we're seeing some of our challenges coming out of, you know, BC, some of the Atlantic provinces. And so that's just a result of how the industry is set up and that whole supply management system that's in place for Canada. When we're looking at the crop side of thing, we're going to kind of look at, you know, how harvest is progressing and what the outlook is there. Take a quick look at some farm equipment and what's happening on that front, and then quick peek at some farmland values and the trends that are happening there. So as I mentioned, you know, the U.S. is a large trading partner and for a large part drives the market, right? Canada's volumes in certain sectors are big enough that we might impact the market, but for major commodities on the grains and the oilseed side, we just aren't a big enough player that we actually impact the market too much. So that's a little bit why we look at what's happening in the U.S. because that really is going to drive more of a global look on our production. So, you know, I think when we're looking at corn, you know, harvest is expected at about 15 billion bushels. That's 183 bushels per acre, which is up from last year. So, you know, certain regions obviously were wet and faced some challenges in the U.S., but it certainly seems like there's strong demand or strong production, pardon me, coming out of the U.S. And interestingly, you know, we're seeing corn come down. You know, I think expectation for the season is around $4.10 US a bushel. So anytime we get around $4 a bushel corn, I think we're starting to get in that realm of break even for some farmers down in the U.S. So as mentioned on our dairy and poultry sector, yeah, our corn prices are coming down, which is a bit of a challenge for some of our grain farmers, but it's helping the livestock side out. So soybeans, you know, the other major crop production out of the U.S. You know, I think again we're expecting more bushels per acre. They've had good growing conditions for the most part down there, but again we're seeing softening of prices. So it's kind of that mix for maybe good yields, but prices are coming down a bit. And when we move over to Canada, you know, I think again we're seeing, you know, fairly consistent production on the soybean side. Canola is also you know, yielding fairly well across the country. Obviously, there's some pockets that aren't doing as well, but in general, that's what we're seeing. And then wheat as well, you know, I think production's been pretty good. So one of the challenges I think we're seeing, you know, for farmers in this region is we've had a run of really good profitability. And so I think to a certain extent, there's going to be some farms out there that have made plans based on, you know, those good years continuing, and we're getting back to what we might call more of a normal cycle where margins aren't going to be quite as good, and you're going to need really good management in place to make positive net earnings on some of these farms. And unfortunately, we might see some bad decisions that were made during good years pop up in some of these not so good years. So I wouldn't say that we're in a not so good year trend right now, but definitely we aren't in the boom era that we've seen in the last couple of years. So just something to watch out for is, you know, maybe some too high leverage in this industry for various different reasons, but maybe expanding based on expectations of profitability being the same in the future as it has been the last couple of years, and we're not seeing that. So And interestingly, as we move into, machinery purchases, this is really where we're starting to see, some real big slowdowns. I think combine sales is the big teller here that we're seeing it really drop 50%. Because and it's probably in line with when prices started to drop, right? At the beginning of the year, prices were starting to soften, but we're still stronger. And that's when you'd likely see most farmers buying more of their tractors. And then as we got into, a little bit of weaker pricing, we're definitely seeing those combine sales slow down later in the year, right? And some of them are really falling off a cliff. So definitely, we always say that it's kind of the early warning signal of where farmers think profitability is on the equipment side. So as we're seeing all this equipment purchasing slowing down, it's an indication that farmers think their profitability is also moving in that direction. And just a quick update on some farmland values. This is always provided by FCC. So, I think we're still seeing an upward movement in farmland values, maybe not at the same pace as we've seen in previous years. And in certain provinces actually going down, which is interesting. I don't think we've seen that. So, BC, for example, in the negative side, which will be interesting to see. But definitely still some big changes going on. And I think a large part of that is, farmland pricing is looked at maybe a little bit differently than equipment purchasing. It's a long-term investment, right? So it's usually balanced between interest rates and commodity prices and profitability. So we think there's probably still some money sitting on the sidelines in some savings and unused leverage that we might see some farmers taking advantage of some land purchasing. But definitely, we're definitely seeing that the increase in value year over year is starting to slow down. If we move into the hog sector, again, I think we're seeing improved margins on lower feed costs. The other piece of it is, I think we're seeing some weaker demand from some of our key importing countries. That's leading to maybe a bit of a softer price outlook. But demand at the same time is still moving and fairly strong. If you take a look at, feed as a percentage of revenue, this is kind of what we're seeing, right? So definitely saw those higher feed prices that, as mentioned, were blowing up the grains in the oilseed sector in 22, 23, eating into the margins on the hog side. In 24, we're starting to see some of that reverse and move back into what we consider maybe more normal scenario for the hog producers. On the cattle side, I think still lots of good news on this front. In general, it's, a pretty strong outlook for the sector. For cow-calf in particular, we're thinking they're going to be above that 5-year average for profitability again in 24. And it certainly looks like there's still lots of room for profitability as we move forward. So the interesting piece is that we are seeing, lower inventories as mentioned in the springtime, and that's continuing on. And again, feedlot margins are gaining some ground as some of those feed prices come down. So interestingly, we talk about lower inventories. They are significantly low, I guess, in the fact that the cow and heifer beef replacement herd is basically at its lowest since 1987. Lots of different factors in there. I think a larger one maybe is I'll call it producers exiting the industry on a high. So and no young farmers looking to fill their spots. So one thing I think we need to look out for is this country of origin labeling. It's coming in January 2026 in the US. At this point, it's voluntary. But as we've seen in the past, anytime there's any way for, the processors to differentiate between Canadian and US, they are going to take advantage of that and offer Canadian a lower price than the US, even though they might not experience any difference on their end. So just something to be looking at as we move into January 26th. We'll have to see what that plays out as and what the impact is on the sector. But for right now, yeah, we're seeing lower inventories, still strong demand for the product, and on those lower feed grain prices, I think we're seeing profitability across all the sectors. If we move into the winery sector, still impacted by that frost in the interior of BC. So there's some major losses that happen there. And as a result, there's been some change in regulation. There's some reduced tariffs on grapes brought in from outside the province of BC, just to help some of those wineries, be able to actually put out product and have some sort of use of their facilities as we go along. So, yeah, obviously mentioning that, BC has some programs out there for, their $70 million replanting program as we go through that. So, and in general, we're seeing sales kind of coming off of pandemic high levels a bit, but still strong from that sector. So I think the biggest thing that's facing the industry right now in BC in particular is just weather, and the inability to grow a crop has really impacted some of these producers fairly heavily. Looking at cannabis, in general, we've talked about the industry in recent webinars, how it's consolidating. I think we're also seeing usage declining as we kind of move forward. So we might be reaching more of a steady state, if you want to call it that. And I think the industry might also be reaching more of a state of maturity. We've, seen lots of consolidation happening over the last couple of years. And it seems like we're figuring out a little bit, as mentioned at the beginning, supply demand, right? So figuring out what the demand is in Canada and matching supply accordingly. So the industry kind of ramped up very quickly, expecting demand, I think, to be quite a bit bigger than it was. And then when it wasn't, supply is having to short itself a bit over the near term here as it reaches a more steady state. So if we look at this slide, we kind of see that self-reported use of cannabis, anyways, over the years as we move through 23 is coming down, and I think 24 is also trending that same way, where we're a bit more into that steady state, and we're not seeing the highs we saw back in 22. Moving on to food and beverage, I think population growth is driving sales to a certain extent. We're seeing that obviously as immigration is increasing here in Canada, that's definitely impacting that food and beverage sector. We're also seeing ESG requirements, could add some uncertainty to supply chains as we go through that exercise, and depending on where you sit in the supply chain, doing all sorts of accountability and tracking and tracing things that we haven't done before could add some uncertainty there. And we're also hearing a lot more about food insecurity on the rise in Canada, even amid dropping interest rates, slowing inflation. We're still seeing that consumers are struggling in certain sectors just to put food on the table, never mind choosing kind of what food they want to put on the table. So definitely something to look out for as we move forward. I think the consumer price index for food purchased from stores, we're seeing that changing, and that keeps going as it goes down and down. is good obviously for consumers, but does put some strain on the processing, the food and beverage sector as well, just to adjust to what they're offering consumers and price points to try and match what the consumer is looking for. And with that, that's kind of the end of the update for fall 2024. And I will hand it back over to Eric.
Thank you, John. Ongoing global events, including the most recent news relating to the conflict with India, appear to be things to watch for anyone interacting with the ag industry. Thank you to everyone who has chosen to watch this version of the webinar, and we hope it has identified topics to be mindful of as you engage with clients in the ag industry. If you have any industry-related questions, we encourage you to contact John or any member of our farm management consulting group across the country. If you have insolvency and restructuring related questions, please do not hesitate to contact me or any member of our insolvency and restructuring team across the country as well. An appendix has been included at the end of this presentation for further information related to our farm management consulting group and our insolvency and restructuring group. You have received this link as you previously requested access to the quarterly ag industry update. Please feel free to forward this link to colleagues and contacts you think might be interested. This link will also be posted on our website at www.mnpdebt.ca. We look forward to providing you with another industry update in the spring of 2025 and wish you all the best for the remainder of 2024. Thank you.